It's definitely not like a taper tantrum like the last person you just had on was mentioning. This is a much more measured and gradual rise. Now, yesterday was quite significant. 12 basis points in the 10-year is a big move. But in the broader context, yields have been moving up for most of the year, and they seem to be settling into a new higher range just over the last couple of weeks. We see this as a relatively healthy development, reflecting underlying strength in the economy and the fact that the Fed is gradually normalizing interest rates.
Kevin, are consumers going to feel this? Higher mortgage rates and auto loans and borrowing rates, does this filter through to the real economy?
You know, if the trend continues, yes. But I think for the long end of the bond market, it's always been about inflation. And until last month, wage inflation in particular wasn't showing its head. So, you know, we got a big number last month in the employment report with average hourly earnings. Tomorrow is even more important to the future of the market is if this is a trend change on inflation or a one-time event. But it doesn't seem to matter. So it's almost like the bond market has thrown in the towel as if this is an inflation play. This is more in line with the strength of the economy, the posture of the Fed, and the weakness of the dollar, which takes out that good hedge trade. And most of those, even some of the stronger longs are starting to give into it. So from here, consumers will be fine. Rates are going up in terms of borrowing, but on the flip side, rates are going up for investors as well. It will find some ground. It may be 5 or 6 basis points from here, but right now it's not that big of a deal unless we were to kind of shoot up another 60 basis points as we have in the last month or so.
Do you agree with that, Mark? And specifically, is it a big deal yet for stocks? Dow's down 218, got a little bit of a delayed reaction yesterday as well, but big deal for stocks and the economy with rates at these levels and continuing to march higher?
Well, I think it's a big deal that rates have broken out and they're now at their year-to-date highs, and they're at their multi-year highs across many tenors as well. We've been expecting this. Again, we just believe that the underlying strength in the economy due to fiscal stimulus would pick up and be supportive for higher rates in general. And as a result of that, the fact that higher rates are really reflecting a healthier, stronger economy, we don't think that that should be a material headwind to the stock market. Stocks have obviously softened in the last couple of days, partially reflecting these higher interest rates, but we don't believe that this should really break the equity market or serve as a material headwind because it's predicated upon good, strong growth and a Fed that's normalizing interest rates as a result. On the consumer side, I would also argue something similar. This is, it's going to raise borrowing costs slightly, but it also means that investors receive a higher return on their relatively safer assets, and it should make fixed income a more attractive part of portfolios more broadly. So I don't necessarily know that this is really going to cripple the consumer, but again, it will be a slight headwind to borrowing costs in the context of a stronger economy.
Very quickly, Kevin, I just wonder if it increases the likelihood that we could see more pressure from President Trump on Fed Chairman Jay Powell. I mean, President Trump has said he's not a fan of higher interest rates. And if we continue to see this kind of market moves, do you think that opens Jay Powell up to more criticism?
Well, it could, but I think the Fed has been really, really good about messaging the move of a gradual increase in rates. There's still a strong chance that the Fed will raise rates in December, but I think the underlying strength of the economy counteracts that. I'm sure the president never likes higher rates, but I think against the balance of where you're seeing the economy and what the Fed's doing, the market will take over at that point, and I'm not sure he's going to get that much criticism.